Hi, I'm Devlyn Steele, Director of Education at Augusta Precious Metals, here with a look at some of the stories that made news in the economy this week. Before we begin, remember to like this video and subscribe for more economic updates. On Tuesday, the New York Fed published its quarterly report on household debt and credit for the fourth quarter of 2023. According to the headline numbers, total U.S. household debt hit a record $17.5 trillion in the fourth quarter, up 1.2% from the prior three-month period. The totals of all major categories of debt moved higher last quarter, which means credit card balances reached yet another record high. Card balances of Americans rose by $50 billion in Q4 to finish the year at $1.13 trillion. Perhaps even more notable than the relentless rise in Americans' debt balances is an associated surge in delinquencies. The report showed that credit card balances in the fourth quarter fell into delinquency at an annualized rate of 8.52%, the highest such rate since the second quarter of 2011. As for auto loans, they became delinquent at a rate of 7.69% annualized. That's the highest for those since the fourth quarter of 2010. It turns out the nation's fiscal infrastructure is in even worse condition. We found out on Wednesday when the Congressional Budget Office released its Budget and Economic Outlook for 2024. The Budget Office projects the annual deficit will rise from an expected $1.6 trillion in fiscal year 2024 to $2.6 trillion in 2034. By that time, the gross national debt is expected to top $54 trillion. Also, the CBO projects that as a percentage of the nation's economic output, the annual deficit will rise from 5.6% of GDP in 2024 to 6.1% of GDP in 2034. For perspective, it's worth noting that these are the kinds of percentages historically seen during times of war or major economic crisis. Now it appears they'll be a standard feature of the nation's economic landscape going forward. Also this week, Janet Yellen was on Capitol Hill to deliver to Congress the annual report of the Financial Stability Oversight Council, and in her testimony, the Treasury Secretary hinted that trouble could be looming in the $20 trillion commercial real estate market. Yellen insisted the financial system is well capitalized and sound while also saying, "It's obvious that there's going to be stress and losses that are associated with this." As it turns out, Yellen's testimony this week came amid signs of renewed pressures among regional banks from those stresses in the commercial real estate market. Finally this week, the Institute for Supply Management said that its Services Purchasing Managers Index for January came in at 53.4, above the 52 projected by economists, and landing in expansion territory for the 13th month in a row. The ongoing strength demonstrated by the services sector stands in stark contrast to the manufacturing sector's persistent weakness. Last week, ISM reported that its manufacturing PMI for January contracted for the 15th consecutive month. That's all for now. We'll be back again next week. This is Devlyn Steele for Augusta Precious Metals, signing out.